Okay, today is September 29, 2015. Let's take a quick look at the market, and then we'll do a little update on some of the momentum stock that we've been looking at since the weekend. So looking at the S&P 500, essentially we're saying that we are looking for this level here, this 1913, 1914 as the resistance, and also coming down here to this October close, somewhere around 1862, 1863 as a support. You can see today it's kind of finished off with a little bit of an indecision type of a candle, basically a little bit of a spinning top, and right now we're essentially just kind of see which way it's going to go. I do expect it might get a little bounce up here and then come down and test this level and possibly break it and maybe get down and test the low here. Okay, so that's one possibility. I'm not saying that that's what it will do, but that's one of the scenario. Matter of fact, if we go and take a look at the the spider here on the intraday, I basically post this chart here on Twitter earlier, and essentially we're basically looking at this. Let me get this in 1 hour time frame so you can look at the chart a little bit more on the time scale here. So essentially we're looking at this particular head and shoulder pattern on the intraday, right? So this head and shoulder here, and we saw that breakdown yesterday, and right now basically on Friday, so basically we're looking for this thing to go maybe get a bounce up here to the 190 191 area, essentially this zone here, or essentially retest this baseline here before it come back down and do a major move type of a play. Because if we look at this on a major move, this 80% major move is pretty much in confluence with the October number of 181.50, okay, or 182. So on the 80%, we basically got it pegged at 181. So those are the type of number that we're looking at on the 80% move, and if it get down to 100%, then it'd be 178. But that's the at least the minimum type of number that we're looking at, to see could we get a little bounce back up here and come down here. Now, it could also just come straight down without even bother to go back up and retest this neckline. So we just have to watch for that. I'm not going to chase this on the way down because we never know how much of a when it decide to squeeze some of the short, and then the short start covering, and so we could get a little flush down here real fast. So it's kind of have to be a little quick on your finger here to do that. So, but the thing is, I'm kind of looking at it for even though it come down, and let's say it come down and tag this. This 80% move, the chances are it's going to get a little bit bounce back up before it probably take it down further, because I see this trend line here that's going to be acting like a little bit of a resistance here. So as a trader, right, we basically just want to capture the swing. It doesn't matter if this swing happened over here or it happened over here, right? We're not investor that is basically buying low and selling high based on value. We're just buying, based on the swing, right? Get on the right side of the trade and just capture that particular swing. So it doesn't matter if this swing here, let's say it's how many points is that? 187 and 195. So it's about 8 points. So it doesn't matter if this 8 point come down from here that we captured this 8 point, or it was up here. It really doesn't matter. You basically just want to capture this swing. So have to be sure that you understand, who you are in a marketplace. Are you an investor, scalper, or a day trader, a swing trader? Because it make a heck of a lot of difference on some of the setup and some of the time frame that you use on doing trading, right? So got to identify yourself and define yourself what you what you're trying to do for that particular time frame that you're trading in. Okay, so that's spider there, and let's quickly just take a look at the the Nasdaq 100. Again, we're basically looking at, oops, what the heck I got here. All right, so let me get this chart back in there. Press a little. I got a little fast finger here. So here's the support level that we're looking at 40.89, 40.90 area, and the resistance is still up at this level here, 40.50, some 43.50 area. Right? So coming down here, sort of still trying to break through that, and we're saying if it break through, then most likely it's going to come down to this level here and retest this October number here. Although a lot of people basically looking at this August low, but that's in that vicinity, so because we're also looking for that possibility of the breakdown of this H pattern, right? So we kind of have to bear that in mind, because if we just put in the Fibonacci retracement here, let's say we want to get into this swing here, and you can see it's kind of broken through this 618. So it's, if we come down and get to this 127, let me put the 127 back on, and a 141. Okay, so you can see this 3540, and if we come down here, 3540, 141 is basically this 3411, and that would bring it back down to this April 2014 low here. Okay, that's this April low here. So you kind of have to watch that when this thing breaks, come down and break this level here, this October level. Okay. Because it's also kind of set up like a head and shoulder pattern too, if you can see that. See here, we could let me see over here. So we basically have this baseline here, right? Okay, and then so we got this this head and shoulder, and then now you got this major move, and that could be some move. Okay, so that's the but right now we basically just kind of focus on this area here. Okay, this this 4350 and 4090 area. Okay. And then the Russell 2000, you see the Russell 2000 has continued to fall. We're looking at this 127 because it broke this H pattern. Yesterday it broke the H pattern here. Okay, so I should take this support off, because that's no longer support. Maybe we're basically looking at this right here as the potential support now, is the 1050 level. Right, okay, and right now the resistance is more of the 1104. So because you can see this H pattern that we're talking about, right? This right here, the swing. Okay, so here's the 50% retracement. So you could see it come up, bump against it, and book the this baseline here. Okay, so that's the index, and let's go and take a look at Apple. Apple really got smacked today. Okay, we were talking about holding this value here, this 50% retracement, and maybe get back above this channel. So right now this channel is out of play, so I'm going to remove that. It's no longer in play. I'm going to take these out. Okay, so and right now we're not even going to be looking at this 115.50 anymore. Okay, so instead we're basically looking at this 117. Okay, this will be our new resistance here, 117, this level right here. Okay, and right now essentially you're looking for it to come down to this January 15 2015 close, so somewhere around this 106 level. So we want to see could we get a little bounce up here and maybe possibly get back up to this 117. If it's not, then we probably were looking at this thing to come back down and retest this 92 level here. Then again, it's going to be in jeopardy of this H pattern breakdown. All right, so let me remove that and redraw this fit line using a different directions. Okay, so we're going to do this. So right now, if we come down to 127, okay, the 127, that will be somewhere around the 80 level, and so it will be somewhere, okay, around this gap here. Okay, come back down and fill this gap. All right, well, we fill this gap. All right, so got to be careful about that. When it come down. So watch out for this one. This 90.68. Or basically somewhere around this 92-ish area here. So watch this 106 area. If we break the 106, Okay, essentially this low here, these pivot low. If we break that, watch out for this 91.68. Then when we get into this, H pattern breakdown, then we probably get into this gap fill. Okay, so got to be careful on that. So it doesn't matter how good a company is, when the market decides to take it down, it will take it down in regardless. Okay, so here's Facebook. All right, remember we were talking about that. We're saying that it might be doubtful that we will see 85 on a weekend video. Then yesterday we said look more probable now, and look what it did today. It actually came down, got close to this 85.99. So I wouldn't be surprised that it will tag it in the next day or two. Then before we get a little bounce, because right now it's inside this retracement zone. So we could come down here to the 618, and then maybe get a bounce back up to this 88, 89 level. Before I take it down or something, okay? Or we could just get a bounce tomorrow, maybe trying to get up here and try to take out, reclaim this 91, okay? But again, now we have this this trend line coming down as a resistance. So if we, have to look at this trend line as a potential resistance. If we could take out this trend line, then here's that 97, okay? Will be another resistance level. So right now we're basically looking at this 85.59. Essentially this 50% retracement to see could that hold. If it can't, then we have to look at this 82. Essentially these level here for potential support. And if it can't take that, then it would be basically back down here 78.6, which is 78 level. Right. So again, these pivot low here. So look at, a lot of time you have to look at the fib to try to identify those pivot, price pivot level to be in confluence with them. Don't just take the fib as it is by itself, by itself in a standalone, because usually a lot of time it does, coincide with some of these pivot. You can see that or get really close to it, right? So you can see a lot of these, pivot high. Right, on a closing basis, you see that it is pretty much coincide with this 82.50 level, and same thing down here. It's kind of coincide with this 78 level, right? So you kind of watch this 85.59, okay? Essentially watching this 85.70, 86 level, okay? And then the 82.50, that would be another key. Okay? And the resistance right now, we're basically looking at this 91, okay, 90.99. Okay, and then on Amazon, we're talking about that, still holding inside this channel here. Okay, all right. So still see how it could, will it be able to get a bounce back up here to this 540, or going to break down here to get down to this 618 level at 466.77, essentially somewhere around 470. It's kind of in confluence with some of these pivot close here, right? This is low, and here's a little bit of a doji spinning top close. Okay, so you got these little confluence here. Okay, and also got a little channel here. If it break through this, then the other thing is maybe doing this little bit of a channel, right? Okay, to come down, and here again, then you can see it tag the 50% retracement. Okay, so those are possibilities. And here's Netflix. We're talking about the apex, this little triangle here. So you got to see, can it get a little bit bounce back up to this 110, essentially this 78.6. And if it can't, let's say it breaks down, then we could go and do a little bit of a major move of what this triangle is going to be end up with. And so essentially we do a little bit of a major move. This is the 80% reach major move target, and you can see that this gap come in play, right? And then here's that 618. Okay, so if it break this triangle, right here, that's a good possibility that it could come down and fill this gap here. Okay, so but here's a little bit of a support here, somewhere around this 38.2 on this major move. So we kind of using the fib extension, so you can kind of see some of these level here. Let me scroll this over so you can see that. Right? So this 84, 79, and 74 and 67. So on the way down. Essentially, this is what I did. Let me show you. Essentially, I'm measuring the distance, of this triangle here, the height of this triangle, and then put it right here where it, at the point where it's gonna break down, then just projects it down, And if I'm doing a 80%, so right now it's basically got 78.6, so which is close to 80%, and it's kind of places somewhere around here, this area, in this gap fill or this gap fill here, but then you also got the 618. So it's pretty close to this gap fill. So that's basically what I'm doing. And likewise, if it break above, you could do the same thing and then just put it here and then project that up. Okay? So just a little bit of some of the technical analysis technique on doing those triangle stuff. And here's Google. Again, we're essentially looking at Google to see, can it hold and come back up here, or it's going to break down. So again, if we break this triangle, we're basically looking at 605 coming down to this 382. Then maybe we'll kind of sit here, try to hold this 596 or 590 area, the 600 area here. So we just have to wait and see, because once it get down here, we can also look at this swing here, right, as a H pattern as well. Right, for this little breakdown, and then we could project it and probably take it down here. So, but we'll wait and see, one step at a time. We don't want to be too far ahead of ourselves. And here's Twitter, and still trying to get up to this trend line here. I think it's going to bump in to resistance here when it get up here. If it's not, it will going to encounter resistance somewhere around this 27 level here on this 618. Retracement here on this Fibonacci retracement on this particular swing, because I'm looking at this possibility of taking it down to somewhere around 1675. If it can come to, let's say it come to here and it get up like this, then maybe it will reverse itself and get up to this resistance somewhere around 34. But if it get up here, encounter resistance, and it start coming back down, then I'll most likely be looking at something of a H pattern breakdown, and retrace it down to 127 extension, the 127 extension at 1675. And here's Tesla again. We're basically looking for that channel. It doesn't happen to be, it doesn't seem like it's holding, and we're looking at now that 382. So right now it's still holding at this 382. I'm going to take these channel out because it's not in play anymore. Okay, and I'm going to take these. So right now what's in play is this trend line here as resistance. If we get above this resistance, then we still got 271 to contend with. Okay, but first thing first, you have to get back above this 254. All right. So until it could get back up there, and if it come down, essentially we are looking at somewhere around this 235, 236, this 50% retracement level. Okay, so that would be the first level of support that we basically are looking at. And if that can't hold, then we'll probably come down and fill this gap, and that will bring it down to the 618 at 226, 225.95. Okay, then finally looking at IBB, this ETF, although got a little bit of an inside bar, not really impressive on this type of candle, but we'll see, because even though if it pop tomorrow, if it come up, you don't want to chase it because it spends so much energy to take it up on breaking on this here. I would rather see it slowly take a couple of days and build it up, so it get energy here and then really make a move. Right, because once it suck too many buyer in too quickly, then you don't have this energy to really have the people chasing it to push it up. Right, so that's why I would be rather look for instead of a big gap up candle or something like that, or watch out for this tomorrow. Maybe it will open up here and then just fade it back down. So be careful. Okay. But still looking for this thing to come down to these extension level here. So essentially we're basically looking at some of these level up here, right? Okay, and these level here. Right, so you see these pivot, right? These pivot here. Okay, so those are the level that I'm kind of watching on IBB. I don't trade this guy. I just recently watched this. I don't even like the biotech, because it's just like the .com stuff, right? Back in the tech bubble, it is so inflated, and I'm not surprised to see a pop like this. So it's just a matter of time, right? Just like anything else. Okay, so good luck.